So now from this year onwards, the things will be different because banks can do in a real way because refinancing is possible after every 5 years and you can do up to 25 years. Now having said that, IFCL being a nodal agency, as chairman has already mentioned, we brought out various schemes to actually make the projects viable and sustainable on the long term. Now one amongst that is direct financing, sorry, all are doing it. But once the project is, financial close is over and the COD is achieved, now developers have to actually think and they have to take the responsibility of doing the financial engineering. Don't sleep after giving the money that, okay, this is running. That's the biggest problem. The CFO or whoever it is, they say, okay, now we got it, they'll sleep. 12.5%, 13% will continue. That's not the thing. You have to do the financial engineering. Some of the companies now are coming, developers are coming. Now some of the products which are available, of course, we are the only institution we are doing it, but other NBFC, IFCs can also do this apart from the bank, but now banks can also do, which is a new policy which has come out by the RBI. One is the subdebt. For example, equity is another big issue which is not there. So we can give the subdebt. So similar subdebt is available. People have to come forward so that if a project is 70-30 debt equity ratio, 30% equity has to come. An institution like IFCL can give 10%, which acts as a subdebt. It is it's a mezzanine financing, what chairman has mentioned there. So that mezzanine financing is there. A lot of people are not aware. They have to make use of this so that you can reduce your equity and then you can bring equity, take the equity to other projects also, so that you can, equity is a very scarce commodity. That's one part. Now another one, once the COD is achieved, you are still having 12%, 13% or 12.5%. There is an institution like IFCL which should do the takeout finance. By the time your COD is over, actually you are having your credit rating is actually moving from BBB to something like A if you are doing really well with the proper offtake and what are the technology you have put in place in that thing. So takeout finance you have to do it so that definitely the risk will come down and then the pricing will come down, so that the profitability of that particular developer will definitely go up. So that's another second product which is there in the market. Third one, as chairman has mentioned, credit enhancement. This again we are trying to develop the bond market in the country so that more and more infrastructure projects, in that renewable energy projects also will come, so that we'll have cheap funds from the market, which is not yet tapped in India. Sorry, the bond, sorry. The bond market is yet to develop. So we are trying to develop that. First pilot project has been done and it's going to come forward, and even now banks can do that. Now the last other one which I would like to mention is infrastructure debt fund. I am the CEO of the infrastructure debt fund of IFCL. We have done 5 projects and we have given structured product, 5 projects we have done it at the holding company level, which I think the Abhijit has mentioned it. At the holding company level we have given it, at the this one at the SPV level also. A structured product we are given, like quarterly they can pay me. First 4 years there is a moratorium and we have back-ended it. See, these are the things which are now coming up. Now I think 5 debt funds are there in the country after announcement 1.5 years back in the budget. We are the first to get listed in this one. So these type of things are coming up, but these have to ramp up. If they do it like credit enhancement and IDF, if it comes, the bond market will definitely take place, bond market, so that more and more public money can come into this one and cheap funds can come in and long tenor will come. The other one which is there available is the line of credit from the multilateral agencies, that is the World Bank, ADB, KFW and EIB. We have the lines and we are participating, we are giving it at a better price. So someone has to tap these lines also. I think more and more the banks and financial institutions, they have to go for get this line of credit and pass on the best thing to the developer so that the projects will become much more sustainable. Now coming to the issue sides, these are the modes which we can do and these are the opportunities which are there. Everyone has to look into it and it's a win-win situation. Now coming to the issue side, definitely in the renewable energy a lot of issues are there, but most of them have been sorted out. But if you come to it, one of them is the RPO, which is yet to take off, RECs which have yet to be taken off. I think 625 crores inventory is lying in the RECs because the price variation is there in the solar and the wind. Feed tariffs in different states are at different discount, that something has to be normalized. Then technology, if you look at it, yes, now the cash flows which generates from the renewable energy, let us take the wind, gearbox problems, or the cracks which are coming in this one. So these are having impact on your cash flow. These technologies, maturities have to come in. Solar, the solar cells which are $1 per watt, it used to be, now it's around 0.7. I think to sustain and the demand which we have in India, if we can make good ecosystems, If it falls down to 0.5, I think enough of the tariffs can be, still get to the grid parity very fast, as well as the cost of the total project will come down. The other one which is very important in solar is, right now 19% PLF is there. For the same size, if more capacity can be generated, less space can be occupied and more power can be generated. So if these issues can be sorted out, technological and the commercials which are from the regulator point of view or from the DISCOM's point of view, then I think enough of scope is there for this to ramp up and go forward in the renewable energy. Thank you.